Good morning. Happy Thursday. Welcome to today's episode of Morning Wealth. I want to start off with a statement that Mr. Powell made. We are not thinking about raising rates. We are not even thinking about raising rates. That was an interesting statement. So three things that you can look to here. A roundup of the FOMC. Tesla is above $1,000 and Italy's plan to tap into mom and pop investors. The S&P 500 ended lower after having earlier turned positive on the statement, but then falling on Powell's comments. The Dow lost about 1% while Nasdaq was higher as Tesla soared. All sectors were down except for tech, which was up about 1.69%. Treasuries jumped, sending the 10-year yields down by about 10 basis points to 0.73. The dollar's losing streak extended, dropping against every G10 peer except for the Norwegian kroner. Gold strengthened more than 1%. Asian equity futures are retreating. Oil tumbled as much as 3.1% before ending higher by 1.7% in New York. The EIA reported a 5.72 million barrel build in the US crude stockpiles amid rising inbound shipments. On the FX, so we'll just do a quick roundup on the FX first this time. Investors drove US dollar to fresh lows after Federal Reserve made it clear that zero interest rates are here to stay for at least for the next year and a half. So the main takeaways from the Fed statement are as follows. Bond buying at least at the current pace, which means 80 billion in treasuries and 40 billion in mortgage-backed securities per month. They see rates at zero through 2022. No negative rate dot plot. So that was something that we took away from the dot plot. Expects the unemployment rate to be 9.3% at the end of 2020 and 6.5% at the end of 2021, and GDP falling to negative 6.5% in 2020 and again rising to 5% in 2021. Meantime, Steven Mnuchin also said that US definitely needs an additional fiscal stimulus, particularly in the retail, travel and leisure industries, is what he said the Senate panel. On the inflation side, the annual inflation rate in the US eased to 0.1% in May from the 0.3% in April, which was below forecast. This is the lowest inflation rate since September 2015. Mainly due to the plunge in gasoline cost, which is about a 33.8% plunge in gasoline cost. A second coronavirus wave is sweeping the US as the country reopens. This is important to note. Florida reported about 8,500 cases this week, the most of any 7-day period. And hospitalizations in Texas on Tuesday jumped to a record of 6.3%. Something that we need to keep a close tap on as we, build on this exuberance of the economy's reopening. Jobless claims data would come out today. Today is Thursday. The downward trend seems to be what the market is expecting. The expectation is for a 1.55 million print, down from the previous week's 1.88 million print. On the equities, Tesla soared past 1,000 after Elon Musk told his staff that it's time to go all out and put Tesla's semi-truck into production. So he didn't give a time frame for the plans, but just 6 weeks ago, Tesla was thinking of postponing the initial deliveries to 2021. Airbus ruled out further production cuts in the near term, deeming a 1/3 reduction in monthly output is enough to offset the virus-related hit on demand. Starbucks expects the pandemic to crimp sales this quarter by as much as 3.2%, and it predicts its recovery will stretch well into next year. The coffee chain forecast and adjusted their loss of about 55 to 70 cents a share. Citigroup's traders are on track to have their best second quarter in more than a decade. Trading revenues is expected to climb about 40% from a year earlier, with the fixed income desk driving much of that gain. Ford also expects the US plans to hit pre-virus production levels by the 6th of July. On the fixed income side, an interesting development is from how Italy is looking to issue debt. So Italy plans to tap into mom and pop investors with a new bond whose payout will be partially linked to the country's economic growth. So the first BTP Futura, which will be offered only to individual investors who can put in as little as €1,000, will be in early July. Investors who purchase the bond at issuance and hold it until it becomes due in 8 to 10 years will get an additional payment linked to Italy's government GDP growth rate. I thought that was an interesting way to entice new investors into their debt program. Will remain to be seen how they'll be able to tap into the savings of their population and how the issuance will go itself. That's the update. Thank you very much. Stay safe and healthy, everyone.